Well, it's another week. We're going into the fall. Hopefully you're getting a lot of quotes sent out, or at least consistent quotes. It doesn't need to be a lot. Um, just consistently quoting is our goal. I think we're set up now. Hello, hello. If you are new here, my name is Sherry. I'm gonna pick up a little one. If you don't know me, I also run a bookkeeping firm, and we here at the Bookkeeper Blueprint, we tell you everything that we do and don't do and what we've learned and what maybe no longer works since everyone started talking about bookkeeping, years and years ago. So this stuff has changed since when me and Megan started our own bookkeeping businesses, and we've changed how we do things because of that. So all questions about that go, whether you have a client that you're working on, and you want to ask a question at the end. But today we're going to talk about quoting. I see a lot of bookkeepers struggle with this just because, like, you know, you think you have your quoting right, and then you quote someone and they're like, "Ooh, that's really expensive," or "What does that include?" And everyone perceives the value that you offer differently. Um, And you're going to find that someone doing 50,000 a year versus someone doing 4 million a year is going to value what you do differently. But even then, within that, there's a lot of different ways that you'll be received. And so quoting doesn't always feel as black and white as it could be. I would encourage you, if you have not already come up with a black and white way to quote, to do that this week, right? We don't want to be quoting based on whatever our gut says. I remember when I started my business, I stalked, like, browsed and studied whatever bookkeepers I could find that had their pricing listed and was like, what do they charge? I went and looked at Bark and just anywhere I could find bookkeeping. And what I found is there are a lot of different ways to quote. You have bookkeepers who, like, there are bookkeeping websites often based in other countries, um, outside of the US or the United States, rather, that do bookkeeping for $100 a month. And you just go onto their website, you sign up for it, and someone, sorts through things. In seeing my clients who have used services like that, it's not the level of service I provide when it comes to my bookkeeping. So you have to determine what you offer also informs your pricing. The world of $100 a month bookkeeping is really not, um, doesn't exist the same way that I think a lot of bookkeepers just think it exists. For instance, if you were to, and I challenged the students in the Bookkeeper Blueprint with this on Tuesday. So I'm not going to go as in depth as we did on the Tuesday night call, but in principle, if you're getting a quote from someone professionally, how do they quote you? How does the lawyer quote you? The lawyer isn't, um, responding to text at 2 a.m. without charging you. Okay. Plumbers, if they get to your house and the project is a lot bigger than they anticipated, or they started the work thinking it was one thing and it turns out to be a more involved project, they're not going to be like, oh, well, I'm just going to do this extra $5,000 of work for nothing. right? You'll have some plumbers who are like, hey, I'm just gonna fix this little thing. No big deal. And we appreciate those plumbers. We appreciate services when they can do that, if they can do that. Um, fantastic. But take those and now think about how you quote your bookkeeping. You could also do an experiment this week and get a quote for a dog walker, get a quote to clean your house, get a quote to do XYZ service. You can also call other bookkeepers and go ahead and get quotes for your own bookkeeping or tax work or whatever it is, whatever you can think of to get a quote for, and just get enough of those to start getting an understanding of like how many services can you really get for $100? Because a dog walker is going to be 65 to 85. But if they get to my house and I all of a sudden add a dog, now you might get like the 20-year-old who's like, yeah, I'll take the dog, right? But if you're hiring like a professional dog walker, they're gonna be like, oh hey, that's an extra $20. No big deal. I've got them. Just so you know, it'll be on, you'll be charged for it through the app or whatever, right? Or hey, next time when I come, you'll be charged for it. Whatever it is. But get more comfortable with quoting. Some of you guys have never really interacted with businesses to this degree. We're doing, the most reoccurring bill that you have outside of utilities and stuff is groceries. And you can have a lot of control over that, right? Netflix, Amazon Prime, subscriptions like that, they're just a fixed price. So you don't argue with them. The only time you negotiate would be maybe to buy a car, which negotiation for that feels less happening now with like things like Carvana and being able to buy things online like that. Okay, so I just hope that like little tangent there on quoting on an experiment that you could run helps. And I really hope that some of you will take me up on that experiment because it will shift the way that you view your own service. Auto glass would be another one that you can quickly get a quote for. Yeah, just start thinking about the products and services that you interact with. You could do, business cards. Most of you guys will order online, but like banners or signage or rent, just get out of your comfort zone is all I'm encouraging you there. So as far as quoting, you need black and white. We need to stop guessing. I don't care if you use a calculator. I don't care if you use our calculator. Our calculator ebbs and flows for different industries and different opinions on how like a student might want to quote. And so we get in and tweak it for them. We used to have a quote, like a calculator online that we created in the same manner, but it wasn't as easy to like edit for the students. I've seen other students use something like Calconic. And those work, but we want to be customizable for you because the way you see the world is going to be different than another student sees the world. That includes your services and what you offer. Some of you guys get really hung up. I was talking to a student this week, and she's not the only one. It just happened to be a real world example of this client may or may not want these extra services. Well, I sent out a quote this morning. And I was thinking about the conversation I had with her, and I encountered a client who will in the future need additional services depending on how they do some things in their business. And I've already let her know, hey, I can do these. Well, might as well go ahead and give her the price for it. And when I send out my engagement letter, I can actually like create like a toggle. These are optional services. You just select them if you want them. And that way they know the whole conversation. So in 3 months, when they come to say, hey, I want to do sales tax, there's no temptation to say, oh, I'll just include it too. Right? Like sometimes we cause our own scope creep. But with this particular student, she didn't know what to charge for some of these add-ons, and it actually delayed how she quoted, and really skewed her interaction with like how she perceived everything went. And it made her less confident in sending the quote altogether, because she sent the quote and then she had to she fumbled around sending these additional services. And she's been quoting for over a year now. And when she started quoting, she struggled with consistency then as well. So she's getting better, which I'm proud of her for. Okay, so there's some thoughts on quoting, and I would love to get into the weeds, but I'm going to pause because I kind of stayed high level. What questions might you guys have around quoting? Because I always want to tailor these calls to those that are on, just so you guys can walk away and start applying this. Okay, you can post those in the chat. Okay, I'm gonna pause there. And the reason I wanted to talk about quoting today is some of you guys feel like you have your quoting down. And yet when you get on a call with me and we start discussing the quotes, you're not as consistent as you think. And I hear it when you start to describe how, well, because he said, or in the situation I did, and you start negotiating down. There's some room for that for sure. But we do need some consistency. Like this is what we charge for this. This is how much I know this will take me. And it will also get easier as you start to hire people, because they're going to track their time. How do you respond when they come back and say it's more than my budget and what I quoted don't think it is too much? They're just not you just move on. That might be an instance where you're not sending out enough quotes in general. Like for a lot of you guys, you're going to want to be at least sending one quote a month. And that's like signing maybe one client every 6 months, every 3 months, one quote a month. If you want to sign clients more regularly, like 1 to 3 a month, you're going to be wanting to want to start sending out one client, like one quote a week. So you're going to have to back into what does that marketing look like for me to send out one quote a week. So that, I mean, if they come back to you, it's more than my budget. Their budget is what their budget is. Can you do it for less? Do you know how much it costs you to do it? Because this sounds like you don't know how much it cost you to do it. Because if you quoted a fair price and you're super confident in that quote, you know how much it cost you and what your profit margin is. And so you can't go below that. If you could go below it, then again, are we consistently quoting? Like, is our pricing set up correctly? And Teresa, let me know if that doesn't answer your question, but if it costs, so you get a client, they have 100 transactions a month. Let's say that they have one checking account, 100 transactions a month. And we want to charge them, I'm just going to say $200. And we know it's going to take our team member, let's call it 5 hours. That's too much, but let's say it's going to take us 5 hours. And we're paying that contractor, that team member, $15 an hour. It's going to take us 5 hours. That's $75, and you charge the client $200. So you made $125. Does that actually cover all of the cost? That's for you to know. So your software, your overhead, the transaction fees, having them in Keeper, if you're using Keeper, what does it cost you for that client? So it doesn't just cost you the 75, but we know at minimum, it actually takes $75 out of your bank account. And out of the 125, is that right? Now, in the Bookkeeper Blueprint, I teach a multiplier of if we're paying our contractor this, it takes the next, we should be making a specific multiplier from that. And that would also be a good check. This is going to take XYZ. The multiplier is this. Are we in that ballpark? And that's going to help ensure that you actually make a profit. Because once you stop doing the work, how do you get paid from your business? You get paid off of the profit. Now you're still probably working in the business to keep the whole thing afloat until at some point you're making enough to hire enough people to work you out of the business. But your first 2 hires isn't getting you out of the business, right? So how do you make money if they're also doing work? Okay. In that instance, when they say it's not in their budget, would it be okay to ask? Yes, Kimberly. So some bookkeepers, we have a coach in the program who on her discovery call type questionnaire. Mine is not like this at all. It doesn't fit my personality or how I do onboarding. So, but hers is really detailed and it specifically asks what their budget is. So if they say that, I would absolutely, and I'm so glad you asked that question because I didn't harp on this. I was so focused on the quoting. What do they need what services do they actually need? That's actually essential. You're going to see this on the flip side too, where a client comes to you and they might want a lot of different things. They might want advisory and payroll and bookkeeping and just everything. They want you to take it all off their plate. But then they only want to pay $250 or $200 or whatever. For most of what I just mentioned there, that's going to start at $1,500 to $2,500 a month. So then how do we reset this expectation of what bookkeeping is? Sometimes they just don't know. Sometimes they would be better off hiring a VA, like a virtual assistant, to do basic coding of transactions and then saving the actual monthly cost for a different service like advisory and something like that. But again, that's where I was talking at the very, very beginning of we have different clients in different income brackets and different mindset brackets and different willingness brackets to get what they need. So absolutely, Teresa and Kimberly, does it make sense to have that conversation? Because sometimes we can take out sales tax and you can say, oh, let's just do a training session. I'll show you how to file it. And this is what this workflow will look like now for you. By the 15th, I'm going to publish your financials. You're going to take that. You're going to take this number right here. And you're going to file this. And if you have any questions, just call the state. You might not say, this is the number. This is how you go file it, because then it basically puts it on you. Well, my bookkeeper told me. We don't want to do that. If they're responsible for it, they need to understand how to file it. And so you can connect them with the state, but you can at least get them set up. Here's how you get into the portal. But you can do that as training if you want. If not, it's okay. We're not going to do that for you. And you might just direct them to their state. The phone number, the website, where to go to get more help with that. But absolutely removing services is a great way to lower it. Often though, if you're just doing basic bookkeeping, there's not really anything to take off because basic bookkeeping doesn't include payroll or sales tax, um, accounts receivable, accounts payable. So and the feeling that I got from Teresa was basic bookkeeping, but it's too much. But absolutely, if there's additional services above basic bookkeeping, which means categorizing income, expenses, fixed asset, completing the balance sheet and the profit and loss. If there's anything above that, you would take that out. I don't know what you would take out of like a $300 bookkeeping quote. Because that should be bare minimum anyway, of like, we are doing these financials so you can see them every month and so that you have tax ready books by the end of the year. Let me know if that makes sense. And we can always talk more about how to have those conversations if I didn't give enough there. Okay. So on the first quote we were talking about, the person she was referring to was a real estate investor with 4 properties, and I quoted her 400 a month. Real estate is funky. So 4 properties and how many transactions? Like 20? Because each property, like individual single family residential properties. Okay, so put yourself in her shoes. Is that possible? So let's say we have a $300,000 to $400,000 home asset. We're renting it out for, let's call it $2,000 a month, just for round numbers. Let's say she has a property manager and they're taking 10%. The mortgage on the house is $1,600. So she's only got $400 a month to work with per property. And you're trying to take 25% of that. And typically in accounting, we're 1% to 3%. So now, with real estate investors, I do have one that he's growing. He's at about 150 a month, but we do his invoicing as well. Yeah, Cameron. But like, do you guys see how like it's just more than like they can possibly afford to cash? Like, so they've got the asset, they've got a mortgage on the asset, then they've got rent. The margin on that is so small that you're taking up such a big chunk of that they can't save to repair the roof or replace the water heater or if the plumbing goes out. Like that's what that cash flow is for. And so in the world of real estate investors, you really have to think about like, what are you actually doing for this client? And so we're going to make sure that they're on Ledger unless they Simple Start. Mine has to be on Simple Start because we're physically sending out an invoice. And then, like you're looking at that $400 a month. That's their margin. That's what they have to work with. And you're taking out 25%. I don't know how that's possible. So, because I mean, okay, and I think sometimes the viewpoint on real estate investors are like, oh, they have money because they have these properties. Well, they're just like you trying to make money, and they're trying to make money in the future. They're not really making money today. A lot of them are just, they're spending the money on the plumbing, the repairs, because their payout comes 20 years from now when the house has appreciated. And so they're just limping along right now. I know I would not pay. So I do have a rental property right now. I could not pay $100 a month for someone else to do the bookkeeping on that particular property. And it wouldn't make sense. It would not be a wise use of $100 a month. Just something to think about. I don't know if that helps at all, but now if you're talking, so there's just other ways to quote that, Teresa and Cameron. What does that mean? But I'm the accountant and I don't do the books for it. I don't do my own business books or my personal books. I have those done. My team helps me do them. But there's also only so much time in the day. Like, sure, we can do a lot of things. They can do the books. That's not the point. A lot of real estate investors can very much send out the invoice for the triple net, like the triple net invoice and the rent. A lot of them could do the bookkeeping because they're smart. They're actually really capable. You're
Can
saving.
I?
Yeah, I'm watching the chat. I didn't see you put anything else. What's
Yeah.
up?
Be- I totally get that. And the person that came to me that I didn't get had a lot going on and a mess. And, I ended up quoting them, I believe it was 1,000, but the person had it was going to be multiple subscriptions. They had partnerships. They had an S corp. They had multiple disregarded, way more than four. And it was
Way
it
different
was
than
good.
what Teresa
Yeah.
described.
Way different. Yeah. And we had a great conversation. She came to me stressed. She knows she needs help and she's tried doing the books. She knows she has effed up and it just keeps spiraling and it keeps. But at the end of the day, she's like, I really want to work with you, but there's no way I can afford. And she actually mentioned like that this is like, I think it was like 10% of her NOI, her net income. And she's like, I just can't justify the expense, even though I'm suffering. So I'm like, either like I go way low where I probably will start regretting it. And I'm like, I don't, this was like in the a couple of months ago where I'm still like trying to like get acclimated and I felt like it was going to be an overwhelming project for a low amount. It would have been a great experience, most likely, but I felt like it just wasn't going to be worth it to me. So yeah, it was that, but she's not an accountant, for us, like, I feel like we'd be able to handle it, but for other people, like that's like the pain point. So it's hard because like should we really like lower the value of or the price of what we're providing? Like for me, like I'm single operator. Like I absolutely wouldn't go lower than $400 for a real estate investor because of how complex it is. Like
It's
this
not
person does not
complex, though.
they don't want to have multiple subscriptions and they're not going to. At least the ones that I speak to. So like you have to be able to
I think
jump through these
I
hoops.
think what you're quoting, the interaction you just had with this client and the one Teresa had are way different. It would not make sense for me at all to pay $100 for the rental property
Hmm.
because there's a property manager. So there's what? There's an occasional repair that comes through the property management report. There's the income and the distribution payment, and then there's utilities. How that should take 30 minutes a month to, and I can look like I'm I'm not paying you $200 an hour to do that.
Yeah.
The value's not
But
there.
yeah, I mean, I also struggle, and which I am going to try to get on a call with you to go over it
Oh yeah, I
because,
just realized
again,
it doesn't look like I got your email responded to. I'm so sorry. I thought we did. I'm sorry.
no, it's okay.
But yeah, no, and what I'm saying, like with what she was asking, there was more there. I'm not saying devalue your service. This would be where Kimberly was wise enough to say, well, what do we remove from this service to make it a yes? How can we
Hmm.
tweak this service? And what you might need to do, Cameron, and some of you guys might need to do this, is really look at what you're doing month to month. What packages you're trying to create? And then go ahead and pause and look at the workflow. What can be automated? Invoices can be automated for the most part. Um, you also need to look at the cost of hiring someone else, whether you're going to or not. Okay. Because it is different. If you're going to side hustle and you're like trying to pay off debt or something and you're going to be the one doing the work, you're not really running a business. You've got a second job. So any money coming in the door like is great. But if you're trying to create a profitable business, we need to look at the service that we're offering. We need to standardize these offerings, which Cameron, what you offered that other client wasn't a standardized service, right? So we need to standardize what we're offering. Bookkeeping, tier 1, 2, and 3. I've got 100 transactions, 1 to 3 bank accounts. I've got 101 to 200 transactions, 3 to 4 bank accounts, or 4 to 6 bank accounts, whatever that is, right? Those are 2 black and white packages. And I should know exactly how long it's going to take one of my team members or myself to do those different packages. And I know all the subscriptions, the cost, etc. of that client. I know Keeper is $10. I know my transaction fee is XYZ. I know I also have, these other 5 services that I know I have this other cost and I'm going to divide it between my clients. Let's say my goal is 10 clients. So I know maybe it's another $15 a month in subscriptions. So Keeper subscriptions is, call it $25. We've got the cost to do it on the client that I said took 5 hours and $15 an hour. And I'm making these numbers up. That's $75, right? So now we're at $100 cost, right? And if you apply that multiplier, you know exactly what the price should be for that service because you know what your profit goal is. So it is black and white. Does that make sense? You just need to know 1 or 2 of the equations. Now, then we look at the package and we say, okay, here's this, we're going to be profitable at this, etc. Some of you guys are trying to get too much profit out of each client. That's mistake number 1, is you're trying to get too much profit. Then you need to look at this package. Does it make sense for the person buying this? So is there a market for it? And we talk about this in the revenue rally. So is there a market for this service at this price? And can the market then bear the price, right? In the case of this real estate investor with 4, I'm assuming she said yes, single family residential properties, they're going to be anywhere from $200,000 to like $400,000 properties. Likely the rent is somewhere between $15,000 and $2,000 a month. I don't know what location. I'm taking kind of the states right around me, average. So, maybe they're only getting $1,600 in rent and their mortgage is $1,100. So maybe there's a $500 margin on it. So they're only making $6,000 a year on this property, and you're asking to take 12 months. Okay. That doesn't make sense. So if you're like, hey, I want that type of real estate investor, you're going to have to know that might not be your ideal client. You might need to shift to the real estate investor that already has 10 properties, and you're going to charge them $400 a month for all 10. But then can you do it? And you're going to extrapolate. You're going to back into, can I offer this service at this rate to this person? And I have spent a lot of time evaluating the person on the other end, putting myself in their shoes and working backwards. And that's why our ideal client is so important. That's why our quoting and our cost is so important, is because it all comes together in a really neat package. If we're talking about someone, and I think some of you guys haven't really like understood the two-way street here, right? They are paying you to do a service, but that service should actually meet a need. So maybe you do need to reduce the value because you're trying to add stuff that they don't need or want to pay for. Not actually. But some business owners, they might be doing 100,000 a year, but their profit margin is so tight on the flip side. Okay, so this happens in businesses. I see it all the time. Their expenses are 90,000. they've got 10,000 to work with, and you're asking to take 4,800, 6,000 of that. So now you're really taking 50% of their profit. And they're just not, like, you're just adding an expense. You're not adding value to help that. So just think about that. Like, and if the client is gross 100,000, 1% of that is what? Say it wrong. So yeah, 1 to 3,000 a year is 1 to 3%, and that's the industry average. So accounting average is about 1 to 3% of gross revenue. Okay. So someone making 100,000 a year, you're charging them you're trying to charge them 6,000 a year for bookkeeping at 500 a month. That makes it impossible for them to be profitable. And so that's not a very compassionate quote. I would want that business owner to be wise enough to say no to my service, because they're not going to make money. It is not worth it to them. If I'm charging 500 a month minimum, and I'm not saying that, like, I factor that into the quote. Like when I do my black and white pricing, that's factored in. So, but you should know that when you're talking to them, how much is your gross revenue? Like, you should get those questions answered so that you can do an informed quote. Now, if you're talking CFO advisory, some more complex type things, that is a different story altogether. That is not basic bookkeeping. And Cameron, you went to advisory. It doesn't sound like that particular client was ready for what you were offering. And so maybe just needed to be presented differently. Okay, I hope did that help someone, like in terms of just seeing it from their perspective on what they could afford. And that's also when we want to know, is it a hobby business? Like, do they have a full-time job on top of this business? That's also going to help to know the intent behind the business and what are they trying to achieve. The more you know about the business in terms of, are they working full-time in the business? Where is the money going? You're going to be able to help serve them, which is my goal. But if it's a hobby business and they're making 50,000 a year, like let's say it's an Etsy business, and I did have an Etsy business at one point doing about 50,000 a year. Her Etsy shop, her products were like $2 each. Etsy takes a fee of like 30 cents. And it was a pretty low margin business, but she was still doing 50,000 a year gross. Her margin was okay, but because it was a hobby business, it made sense for her to pay for bookkeeping because she didn't have the time to do it. And so you're still going to have to evaluate how long is it going to take to do Etsy. And that was a lower margin profit when we took it on, because it wound up taking more time than I thought. And because it just wouldn't, she had like over 100,000 $2 transactions. So it was pretty tricky. But like when I go and do my analysis, our internal profit margin on her particular account was a little bit lower than our ideal range to be in. And then keep in mind, profit margin is then how you pay yourself, whether you're doing the work or not. So Cameron, in your instance, you don't have an employee, right? So you're charging someone $1,000 a month. Keeper, let's call it, is $10. Let's say you have some other subscriptions. So, they cost you $100 to have the client. You're making 900. If you take out 50% of that, 50, 60% of that, you've got $300 profit left in the business. Okay, because you then are your own expense, right? Okay. All right. I really hope that like did help in terms of like at least understanding once, because some of you guys have quoting methodologies from all over the place. I'm not trying to tell you like this is how the Bookkeeper Blueprint recommends quoting. A lot of our coaches quote differently. Our pricing calculator is, I looked at how all of the coaches quote different things. And then I looked at the market and I said, what makes sense? And then I tested it on my own clients and my own quotes for a few months. And it was pretty for like an actual business. I would not apply that to real estate. But actual like for-profit businesses, I would apply it to. And I do. I actually used it last night to check a quote for myself. Payroll, I'm not in love with that section on payroll is a little funky. Like, how do you quote it, and then how much stress are you willing to bear? So in the quoting price calculator, if I was going to edit something, I would edit the payroll section most, like the first evaluate. But some of you guys don't even touch payroll or run it for the clients, so most of you guys get to skip that section. But that section was bred out of students asking, well, how do you charge it? What about this? What about that? So it kind of evolved. And it's just not my favorite section, but I don't quote payroll. Okay, Cameron, did that help at all? Like as far as like your client goes versus like the other business, like just quoting a business or a real estate investor, like an average real estate investor, not a complex one. All right, what other questions do we have about quoting? We've got a few minutes left. While you guys are thinking, I'm gonna take a bite of my muffin.
It sounds like you have to gather a lot of information before you can give a quote. And if they're within, let's say, your highest quote area, then you can either add on or downgrade a service a bit so that they won't be scared off almost. I mean, like you were saying, if you have a client that has a profit margin, or a potential client rather, that has a profit margin of $10,000 a month, $4,000 to $6,000, I could see them easily saying no. For exactly what you said, that it's just going to be a deep dive into their profit. So you, in Bookkeeper, do you have a sheet that says, John and Mary own 3 properties, their profit margins are, I quoted because, something like that, like a guide, if you will?
Yeah, we have a guide. We have a pricing calculator.
Okay.
That walks you through it walks you through different like how to gather information about the client.
Okay.
And then produce the quote. However, what you unfortunately just did is you made a mistake of fitting your packages to the client versus being okay with the client. Like, not every client should be saying yes to you.
Okay.
And you just tried to tweak your package so that they said yes. Your package should be what the package is. The cost is what the cost is. You should know all of that. So the reason it sounded like sounds like you have to go ask a bunch of questions from the client, you don't. You should already know those basically, because they should already informed your packages or your pricing strategy.
Hmm.
So that when you show up to the call, you're confident, you already know what the price is. What you now need to know is, what do they have? And what package do they need?
I
Do they
see.
have one bank account? Do they have 10? Do
Right.
they do 4 million in revenue? Do they do 50,000?
Okay.
What type of industry? Are they a real estate investor? Are they just like a service-based graphic designer?
Yeah.
Are they an S
Okay.
corp or an LLC? Like, you just need to figure out what package the client goes into, because you should be able to say this. I don't care if you're a graphic designer or a dog walker. If you both make 300,000 a year, you both have 100 transactions a month. Even if one has a POS system and one doesn't, like one
Okay.
uses Stripe, the other one uses QuickBooks invoicing.
Okay.
Okay, that might change it by $25 each, but okay. Basically, at the end of the day, we're going to give them both the same quote, because the workload's it's going to take us 5 hours to do. I'm just using 5 today. It's going to take us both
Okay.
5 hours to do. It's going to cost us both of them $75.
Okay.
Let's say the dog walker makes 500,000. The graphic designer makes 300,000, but they both have 100 transactions and 3 bank accounts. We know it's going to take us 10 hours each to do. They're going to get the same price.
Hmm.
Does that make sense?
Okay. I guess part of the reason for my question is I'm thinking that each of those houses, let's say, needs to be standalone, because like you said, every month they're going to have the same bill for a property manager. However, house A may have needed, I don't know, a new garbage disposal this month. That's going to be a transaction, which you're right, I've already included in my pricing. But on, say, 4 houses, do you keep those 4 houses separate, or do you combine them in your bookkeeping?
Yeah, I don't think you're doing real estate. From past conversations that you and I have, that's not your industry.
Right.
So just like a business, you're going to take it with, like, so Cameron just made a comment, the quote that he was giving was for 2 filing entities. So I just responded there would be at least 3 different quotes. So it sounds like some of the entities are personal and there's 2 like other individual filing entities. So that's 3 quotes. So he
Right.
technically, instead of giving $1,000 quote, gave like 3 $300 quotes, or something like that. So it's per filing entity, and then within that business, then you say, this is what that entity has. So if I have someone come to me, so let's say the example I just gave is one owner. They're a graphic artist and they're a dog walker, because they get tired of sitting at their computer. So they have 2 businesses:
Okay.
graphic design, dog walker. When they come to me to do their bookkeeping, I'm going to look at their graphic design business. I'm going to say, here's the quote. It's $250 a month. When they give me the dog walking business, I'm going to say it's $250 a month, because they're similar.
Gotcha.
If they were different, I would say, well, this one's $500 because I'm also going to do your payroll and your invoicing. oh, dog walking, you use an app, you get paid by Rover, whatever. Money comes in. That one's going to be really simple. It's going to be $250. But I don't have to like, oh, well, is he gonna, ooh, that's now $750. Is he gonna, I don't care what his response is.
Yeah.
Because am I then willing to do both businesses for $250?
No.
I potentially am then paying him to do bookkeeping, and why would I do that?
Yeah. Yeah. I get that. And
But do
you're
you see
right.
like how I like had to like, we need to have a structure to our like our quoting. That is my point today is we
Okay.
need to have a structure. We need to have a methodology behind our quoting that allows us to show up and quote without then stressing and going to bed and being like, oh, I should have said it this way, or I should have presented it this way, or I should have, what about this? What about that? Oh, I could have discounted this.
Yeah.
No one has the time to stay up all night reliving a $200 quote. The problem, so there's two problems that I see most bookkeepers have. We don't have a consistent way to quote because we don't know what our cost is. We don't know why we're quoting that way. And then two, we're not sending enough quotes out.
Okay. So the bookkeeper blueprint goes into that.
We
And
talk a lot about quoting.
okay. Okay. All right. Well, good. Thank you, Sherry. This was very helpful today.
Yeah. Yeah. Just putting action behind, because sometimes quoting feels very conceptual,
Right.
very theory, very philosophical, but it's very tangible, very actionable. And if your quoting feels philosophical, you're not quoting right.
And again, if I'm quoting too low, that means everybody's going to say yes. And I, 3-6 months down the road, am going to kick myself in the rear end for all this work I'm doing.
Yeah, but guess what? If you're quoting too low, you're going to get more people that say no because it's still too much.
Really?
So you fell into the other trap. That's why you really need black and white pricing. You could tell someone you're going to charge them $50 a month, and to the wrong business, it's going to be too much.
Wow. Okay.
So why are we, so you need to 100% remove the opinion on what are they going to think. You need to ask, will the market bear this? Will this, remember when I went back to and said, does
Right.
this type, I put myself in their shoes, right? Well, I can put myself into the shoes of a $4 million business owner, and I have a couple of those. If I showed up and said, I'm going to charge you $50 a month, what do you think their response is going to be to me?
Well, just like mine, I kind of chuckled a little bit.
But now if I'm doing 100,000 and I tell you I'm going to do $50 a month, you're going to be like, great.
Yeah.
You think, right? But that might not be like, we really need to look at who are we serving? Who is our client? What do they need? And what can their market bear?
Okay.
It's not as black and white as, is it cheap enough?
Yeah.
It might not be cheap enough to the like you can literally have someone upset with you at $50 a month, and I'm not joking. Does that make sense?
Yes, it does.
So we're not trying to race to the bottom,
Right.
but we do want to make sure our cost is adequate so that when we have 5 people say yes back to back, we don't look up in 6 months and be like, I want to shut this business down. Like, this is ridiculous. I'm gonna just go get a job now.
Okay.
Maybe there's a season where you need to do that, but like in this case, you can't hire because you quoted too low.
Right.
But you would have
Okay.
known that if you had known the cost. So you need to treat yourself as your own employee and you need to know the cost. So it's cute to say, yeah, it's just me. So, I don't need to factor that in, but you need to know the cost
Yeah.
because
Okay.
you cannot work 24/7, especially if you have a full-time job or a part-time job or kids or whatever going into holiday season, going into tax time. Like think about your life, real life for yourself.
Mm-hmm.
Maybe you are retired and you're home and you feel like I have all the time in the world, but you still cannot work 24/7. You will go
Right.
crazy. It is not healthy to sit at a desk all day. You need to go on walks. You need to eat food.
Okay. That's very good information, Sherry. Thanks again. I really appreciate you.
Yeah, I really hope this was helpful to a lot of you this morning. Okay, I didn't think of it now, but I will need some per door. Yes. So, me and Chelsea, when we quote real estate investors, we have a base and then we have a per door. And then there's some other things I can go into that. Absolutely. So that's how I do it. And Teresa, are you still on? Oh, bummer, she left. I should have mentioned that. I was trying not to get into like the nitty-gritty of quoting. So like I'll tag her and tell her to go listen to the last 10 minutes. But Teresa, when you said, 4 properties, I quoted her $400 a month. It might have been like $200 base plus XYZ property. And then she could have divided that over. It would have made it a little cheaper for her and might have made it possible because then like yeah, I would have been closer, maybe around $200 a month for those 4 properties. But
Can I ask
I would have
one more
also
question
had
before?
the LLC. I would have also asked if they're different QuickBooks or not, because that would have mattered to the quote. Yes, what's up?
So I send out like an engagement letter, and a proposal package. Um, do you include like everything, like all your services that you provide, like in the event that they may want to add something to it later in one proposal, or is everything customized per customer?
Um, I don't include everything. That's what email marketing's for. Like, does that make sense? Like, email marketing is where we can highlight different services. In the quote that I sent out 2 quotes this morning. When I sent those out, me and the client physically discussed 3 other services that will be a need for her in the next few months, like going into 2026, because she's restructuring. I went ahead and sent her the quotes for all of those, so that she could see them, so that it's like, written in stone. Just let me know when you want this.
I meant like the engagement letter. So like the templated engagement letter.
That's what I was talking about.
Okay.
So, I mean, so I did, like, she couldn't, mine's all, I guess I don't know what you separated. You separated out the quote and the engagement letter?
So I have a section for recurring monthly services if there's a cleanup or a project, and additional services, which would not apply to everyone. And I'm finding myself changing it every
Yeah, so
time I'm sending
you could do recommended services. And you can tailor it to that client. You can do, clients like you also often opt in to XYZ, like accounts receivable, accounts payable, and then you can list them. But that feels, I would almost do that as like recommended services based on what we know about you type of section and say, here's what it looks like for us to take on your accounts receivable. And so you're going to put accounts receivable, 25 invoices, $100 a month or whatever it is for you. And then I would link to, we know businesses change and seasons change, whatever you want to say, use ChatGPT, and link to a section on your website that lists all of your services, maybe without pricing, but you can list all of your services.
Okay.
Or if there's like service you want to highlight and make everyone know that you do, like advisory or cash flow, you could put that under recommended additional services right there. But if you want to list all of the services, I would save that for like a brochure attachment. Like when, I don't know if you're just sending an email, but you would have like, if you're sending an email, you might have attachments. So you'd have an engagement letter, then you would have like about us, get to know us or whatever. And that's going to be your brochure, which I think you have some sort of like really detailed like PDF or something that you created, because I remember talking to you about you doing that.
Yeah.
That's where I put those additional services, is in that pretty thing.
Okay.
And then in my engagement letter software that I use, there's physically a way to attach like a brochure. And so when they're flipping through the like sections, it will pop up and be like, and then it goes through as an attachment to their email. I'm pretty sure. So, but I no longer send a brochure. I got tired of updating it. But email marketing though would be the way to like really highlight additional services and be the storyteller of, you know, Sally Jane was encountering this issue. We came in to help by taking on accounts receivable. This is what it looked like. This was her before and after. And it could be vague, but
I
like
don't have
before
a
and
story
after,
like
like
that, but yeah.
she's going crazy. The invoices are going out
Mhm.
wrong. She can't train a virtual assistant to do it to save her life. That's where we came in. Now she doesn't, you know, she can go to, she just took a week-long vacation. And she told us she hasn't gotten to do that in 2 years because of this invoicing problem. That would be a before and after. Okay. Well, I hope that helps. Cameron, I'm gonna go look at your email.
Mhm.
Because I did not respond. And it must have like, because I don't even see it in my inbox, so I'll have to go look, see what happened. I guess I thought I
All right.
responded, so. You guys have a wonderful weekend, and I will see you on one-to-ones or inside the Bookkeeper Blueprint. Bye, guys.